Hello, everyone. I'm your boss, Joe Boss. And welcome to today's daily plan. Hope you guys enjoyed trading CPI. But man, did CPI today catch a lot of people with their pants down. Certainly was nutty, but it came out according to the expectations that I set in the stream yesterday, where if you got a 3 handle, you're going to see a spike in the DXY in the US dollar. So the question now is, does this move continue? And based off the preliminary commentary that I've followed up on, the answer is still not quite so clear. Because net CPI in January that we got today is still decreasing. It just decreased less than expected. But let this be a lesson for people who are especially new to interpreting economic events. Just because there's an absolute change from December to January's CPI number that shows inflation coming down, what mattered was the expectation, the forecast of CPI going into today. The expectation was 2.9, 2.8%-ish. And we didn't get that. We got 3, I believe, 0.1. And that is a positive change in inflation compared to what was expected. So whenever you hear me talk about what makes people traders is adapting to the change in expectations as new information comes to light, the new information was CPI came out higher than expected. So now you need to be competent enough to take that fact that CPI came out higher than expected and think about, okay, given this change, this new information, how should I update my expectations? Now, yesterday, I already went through the gamut of, well, if CPI comes out a 3 handle, I expect the dollar to get stronger. If it comes out at 2.9, 2.8, I'd expect the dollar to get weaker and then see some move, some potential risk reversal, dollar strength into the end of the week. And if it came out even lower than that, call it 2.7, then we would see the dollar get weaker and that momentum continue forward. But now with CPI at 3.1, realizing itself in the 3 handle, we have to ask the question, does this lead to further momentum in dollar strength? I'm not sold on that, specifically because of the longer term argument that inflation is coming down on an absolute level every sequential print. So even though the rate of change has created a surprise today, and by the way, not everyone was surprised. There were a few people that I looked at today who were saying, oh, look, I made the forecast of a 3% handle on CPI. Look at how accurate my forecasts are. And those are generally guys you want to follow up on in the future for future CPI releases. But in this particular case, yes, it's going to make dollar strong. The question is, how long does it make dollar strong? And I got a bit of uncertainty about the dollar strength here. Could it continue into next week? We're going to be figuring that out because there's still a slew of economic events for the rest of this week that are quite important. I don't know if I'll be going over them right now here in the stream because I'm quite busy. So I'm going to go ahead and look at our analysis, look at the trade plans, look at the ranges, and we're going to at least observe right off the bat what are the risks of going higher for this week and what are the risks of going lower in some other assets this week. So right off the bat, on the dollar, the expectation from, call it 5 days ago, February 8th, we're in line and we've started to overshoot. When we look at these monthly spots, I remember saying, once you go past this 105 spot and you start trading, I'd say past 105.4-ish, you're going to start dealing with a lot of uncertainty about where the high for the month is going to be. So this is the primary area that I'm uncertain about. So when I say I have dollar uncertainty, this is what I'm looking at. We can go ahead and once again look at our seasonal highs. And most of the time, the high for the month in February over the last 34 years comes in around here. But you can also see why, hey, if we start trading around this area past 105.4, you're now dealing in some uncharted waters. So definitely keeping my eye on any more dollar bullishness from here. I would like to see the dollar come to a top sometime this month, sometime in the next 50 or so points if we do continue moving higher from here. The risk this week so far of going higher still is hitting this cluster of highs. Given this spike up, I think going into this area is definitely in the cards. So this is past 105, call it 105.10, 105.30. Again, that's below the 105.4 area. And you can also see here on the week going past 105.4, you're now dealing with the tail of your high distribution. So if we do move higher on DXY around this week, I don't know, it looks enticing maybe to take some risk reversal opportunities around here. But we're going to have to see when it reaches these prices and what are the risk events on the days later on in the week. So that'll be something to look forward to. Let's go ahead and run down the G7 FX pairs, all the US dollar pairs. We'll start with New Zealand. Took a couple of shots on New Zealand. Good stops, I'd say, on both of these. Kept me from getting my fingers ripped apart here because my expectation was alongside the consensus view of 2.9, 2.8. So let's go ahead. And yeah, quite a decent bit of uncertainty around where the low comes in on this week. Again, we're not probably going to be hitting this spot here. Getting to the high over here on the month is now going to be in question from the forecast 5 days ago. How about we look at our closing odds? So looking at these closing odds, I'd say that there's a decent chance of risk reversal. So reversing into this spot here on the close, but you're talking 40, 50 pips maybe. I'm not totally sold on this idea, but that is something that stands out to me here. Is going to close in this peak here where you have this blue highlight here. And these blue highlights are just where you have your highest density probabilities of getting a close for the week, given any single week. And we can do the same thing with the seasonal odds. Give it a sec to do its calculations. And yeah, cluster of your closes right around this spot here. A wee bit of overlap in this spot, so maybe end up closing closer to the 61-cent mark by the end of the week on weakness in the dollar going into the end of the week. I don't know if we'll end up getting that, but looking at the odds, that would be my expectation. Aussie played through. I did get out of this, which was good. It made money. Didn't make very much money, but you can see I didn't have to eat that one. And the forecast from 4 days ago lined up with expectations. And now we also have the same sort of setup here. Risk reversal into end of week. And these lines were drawn here on last Friday. That's why having the next week's, the next day, the next month's probabilities or ranges can be exceptionally helpful when making a discretionary decision about trade planning and swinging. Pretty low likelihood of closing down here, but you do want to be careful on any more bearish news. Well, looks like a lot of your closes do show up here. It would be quite sad, in my opinion, to see the Aussie dollar just go sideways into the end of the week. That would suck. That would really, really suck for risk-on traders. Okay, let's check out our low odds right here at the edge. The risks of going any lower here, call it 64 flat. So going down here is a risk. We're going to have to look at our risk events going into the rest of the week to figure out our own discretionary likelihood, our own expertise, our own discretionary expertise of figuring out what the likelihood is of going down here to 64. But 64 this week is in the cards, and if you are going to end up closing sideways next week, 64 is more likely to be in the cards. So maybe there's a particularly strong reversal of, again, probably another 40 to 60 pips that brings it back up to here, gives you a nice big long bottom wick for if you again are looking for any sort of reason to get long. But this is once the week closes, if you get there, then maybe it would be a smart idea to consider the long position, but right now this is not a good look. And the yield spreads are still looking pretty bad. The long-term memory of this thing is still quite bearish. So I would simply be cautious on Aussie dollar risk, on Aussie dollar reversals. Pound, that went pretty much as expected. Okay, that's nice to see. So maybe we get more volatility going sideways on the pound. Risks of going to the mid 125s is still there. A lot of the conditional expectations for the rest of this week is based off of what could go wrong during the rest of this week as far as economic events goes. So I'd recommend to read outlooks, read more commentary, read analysis on the economic events that are up and coming and what those economic events can imply for the movements of the assets you're looking at. Euro dollar did not hold up, but went right to a peak on the low. That looks pretty darn good. Quite a bit of uncertainty about where you'll end up closing. Again, maybe there's some room for a bounce back into the end of the week, but less so than on the Australian dollar and New Zealand dollar pairs. This might move 30, 50 pips. So the range is a bit more constrained, it seems. Let's look at our low odds based off the seasonal probabilities. And yeah, you find most of your lows in this spot here, but now you're dealing with a bit more uncertainty about actually finding the low right around here. So I'd be cautious of any more sliding lower, another potentially 20, 30 pips, and then seeing reversal into the end of the week. That is what I'd watch out for. So nothing super clear from this point on into the end of the week on euro dollar. The dollar CAD is now on the move from the forecast we made 7 days ago. Let's go ahead and look at our high odds here. Yeah, I'd say this one's probably going to see more positive drift into the rest of this week, into Thursday. Definitely want to be careful once you do start trading around these prices in the high 135 zone, because now you're starting to deal with much, much, much more dispersed probabilities over a wider price range. Let's actually check this out on the month. And yeah, I think that settles the case of the positive drift going into sometime this week, maybe sometime next week, of potentially getting higher highs, maybe touching the 136 price right around here. Oh, and check that out. We tapped that right at the probability weighted pivot. Let's see. Dollar yen. Oh, this is on the up and up. Let's check it out on the week. Yeah, would definitely be careful. Again, with the yen, the volatile moves on the yen. Always something to watch out for. It does seem like a lot of your highs are going to end up here in this particularly volatile spot here. A lot of your highs are a lot more conservative, below 150. But now that we're up here I'd set the expectation that the high comes in below 151.4 sometime this week. But then you look at next week's odds, and yeah, that puts the mid 151 handle in a more likely spot to hit again next week. Yeah, and you can see there's a little bump right here in the mid 151s. Maybe if you get another spike up, you're going to end up tapping that. Okay, so now we got that done with the FX side of things. Let's go ahead and check out ES. And we got the move lower, and we had a nice bottom wick there. I don't know if we'll end up seeing the risk reversal come into play here. Let's go ahead and check out our low odds here over the last 24 years. And yeah, stuck right above that S1.5 pivot at 49.35. Again, this is one of the issues I have with pivots. You have this range of 33.5 points, and you don't know exactly where the low in that range is going to be. So this is where range probabilities comes in, and it tells you, yeah, finding your low around here is a guessing game. So that could have just been a crazy falling knife, and it just zipped on right back out of luck. Let's go ahead and check this out real quick on the month. Again, likely top for the month here. There's some, again, I was saying, hey, there's risk if you are going higher here of going significantly higher. It seems like this is now out of the cards, that expectation. So real quick, let's look at our closing odds here. I'm not terribly certain where we'll end up closing, but I'll set a neutral expectation here that we essentially close sideways here on the month. Move that one more bar forward. Let's check out our closing odds here on the week. A lot of closing odds still higher up. I'd say, looking at this, there are better risk reversal opportunities on the S&P going into the end of the week. Let's check out the NASDAQ. Oh. Wrong ticker. All right, so now let's check out the NASDAQ. We kind of have a bimodal setup here. We have a lot of closes up here and a lot of closes down here. So unlike the ES where we just had one peak, I just drew a sideways expectation, this might have a bit of a positive drift, this might have a bit of a negative drift. Just tapped that likely high peak. Let's go ahead and check this out on the week. Again, this is a slip and slide zone. Pretty low certainty of figuring out where your lows are going to end up, but hit a likely high there. Let's go ahead and check out our closing odds again. Oh, I'd say this might have better risk reversal opportunity this week. Don't know if it'll get up here to the peak, but it might be a week with a long bottom wick and still be a red candle. Let's go ahead and check out our seasonal closing odds, and wow, seasonally, that's likely low. So the low potentially is in here on the NASDAQ for the week. And you can see right around here, 33% of the time this week, your close is around this spot. Call it between 17.7K and 17.9K. Let's go ahead and just draw a box. Let's see. Let me go ahead, color this stuff blue for my expectation of the range that will end up closing the weekend. And let's timestamp that. Okay. Next, commodities. Oil wasn't impacted significantly. I was hoping for more serious continuation, but it doesn't seem like we'll be hitting these highs this week. Next week, oil is a lot more bullish. So I would set the expectation that maybe we hit these spots sometime next week. Where's my little drawings? Sometime next week. And we can go ahead and look at our high odds. Yeah, a lot of highs next week. And we can go ahead and look at our low odds. And a modest likely pullback for next week. I'm expecting some neat positive drift up into 80 over the next week and a half then. Still, if you break the high that we made today, you are essentially guessing where the high is going to be this week if you do see continuation, but it would put you in this box here in the 79 handle. But I'll set an expectation that we end up closing this week where I originally set my closing expectations here 4 days ago on the 9th. Let's check out gold. And gold did not perform well today with the CPI. Real quick, let me pull up this chart right here. You can see decent stop on that. You can see it saved quite a lot of this movement on this bar here. And now it's at another likely low on the week. Looking at this, I think that's likely going to be a low, but real quick. Yeah, some downward drift could still be in store for potentially the next couple of days here. And real quick, let's check it out on the month. Oh, that could be reaching close to a monthly low on gold. So maybe into the end of this week, beginning of next week, you find a low on the month, and we end up heading to a likely close. Wow, those are some pretty big peaks. I wonder if it looks like that on the gold futures. Nope, the gold futures look a bit more normal. So I wonder what's going on with that chart. Again, the lows look exactly the same here, but oh, I was looking at a 2-day chart. Gotcha. Again, different charts on TradingView provide different data, and these indicators are based off the data that's on your chart. So use a chart whose data you trust. And Oanda has a pretty good reputation for having good data. A lot of people use the Oanda data. I mean, if you're going to go and participate in the TradingView paper trading competition, the gold, I believe S&P and Euro-dollar charts that you're allowed to use for the trading competition are all Oanda charts. So yeah, I'd set some expectation for a bullish continuation, but it's effectively a guess or a bullish risk reversal into the end of the week. But it would be just a guess. Oh, there we go. So I'm guessing, yeah, it's just because I selected a 2-day. So I misclicked and hit 2-day. So I'd say something like this. And then something like this into the end of the month. That'll be my expectation for gold going forward. We'll see how that plays out. And we already did oil. So now we get to do Bitcoin. Bitcoin didn't react well to today's CPI, but arguably it was one of the least volatile reactions out of all the markets we've checked out so far. And I'd say that this bullish move probably is going to end up continuing. You still got the rest of the week here. Yeah, I would still be careful of more upside here on Bitcoin into the rest of this week. Absolutely. All right. So, with that all said and done, I still got quite a bit of time here. I'm only 30-ish, 35-ish minutes into the stream. So if anyone wants me to look at something, go ahead and ask it in the chat. In the meantime, I'm going to check out some of these things. Looks like the car manufacturers got hit particularly hard today. 2% on Stellantis, 2.5% on GM. Yeah. 5.6% on ARC. Wow. I sure hope I have the recording of me saying that's a likely high. Because, man, a 6% move in a day. Wow. That is nutty. And like I said, you got to be cautious when you're in these areas here. And especially with equities because you have gaps in your data. Let's look at some closing odds here on ARC. Ooh. Probably just a slight drift lower into the end of the month. Let's see if that one plays out. And let's look at the week as well. Yeah, so maybe a bit of a pop back. You can see some of these charts based off my interpretation and my expectations of these probabilities. Some of these charts, I think, have better expectations of having some bullish move into the close. The question is, what's the magnitude of that going to be? And it doesn't seem like that's going to be a particularly strong move higher. So I'm not particularly sold on buying these lows because it's not like we're in a massive bull trend or bull market. And buying these lows is going to be catching the low of some swing. It seems like this would be I don't even know if you could argue that this is some sort of mean reversion play or whatnot. Maybe, but I wouldn't even argue that. It seems more like this is just going to be a little bit of relief. People who've made excellent profit off these moves, letting go, taking their cash, realizing their gains. And then, again, depending on the asset you're looking at, the plans start to change a bit more dramatically next week based off these odds on a lot of these pairs. Some of these assets look quite bullish for next week. Some of these assets look quite bearish for next week. So I'd say look at how the rest of this week plays out, figure out what the risk events are going to be for the rest of this week, and then come Thursday, Friday, as we get a week ahead outlooks from institutions to start figuring out what the risks, what the risks are going to be in the following week. Because we're getting pretty close to the end of the month once we start trading into next week. And based off our expectations for next week, maybe we can extrapolate that into the end of the month. So there could potentially be some swinging opportunities next week into the end of the month, maybe first week of March. So we'll get there and look at the information we have available to change our expectations when we get there. All right. I'll go ahead and say thank you guys for watching. It's another sub-hour stream. I'm getting pretty efficient at this. Bam, 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 going through all the major assets. And again, if you want to ask me questions about these indicators or anything with the trading group, or anything to do with the outlooks in the Discord, just hop in the Discord, send me a ping, and I'll see you guys in a bit.